Thank you for joining us. It's a distinct honor to host you today. So let me just start off with a very general question about how you see the Chinese economic outlook for 2023, especially in light of the COVID reopening. I saw a lot of analysts thought that there might be a rise in infections and that this might inhibit the economy. Others seem to think that the economy is going to exit that period very quickly. I've seen forecasts from 4.5 to 5.5, sometimes higher. It seems the forecasts are clustering around 5%. But how do you see it?
Well, I think the economy can easily achieve between 5 to 6% growth and even higher. And I think there is just there are two reasons. The number one reason is obviously because of the removal of the COVID-related restriction. You might know or you might not know, at some stage last year, particularly during the second quarter of the year, we actually had something like 2/3 of the cities engaged in the restrictions of quarantine or segregation, social distancing, and so on, one way or the other. Some scholars also analyzed the truck flows during that period, and they found overall the country about half of the truck flows were lost because of these restrictions. So that, I think, is the simple reason why the economy would easily bounce back. We had a sudden opening during December, but by January, and now I'm already traveling around the country, we almost forgot what happened last year. But you mentioned that there could be a second wave or third wave, which I cannot rule out. And I think that's a risk factor we should keep in mind. But my best guess is even if we hit again by the pandemic and the new variant, I don't think we're going to go back to the older measures like very strict restrictions on movement of people, on economic transactions, and so on. So I think activities can rebound quite forcefully. The second reason is also easy. I think the economy is probably, the growth potential is probably still around 5%. And given that last year we only had a 3% GDP growth, 5 to 6% growth for this year, if it materializes, it still, to me, is not an overheating scenario. It's not really overly optimistic scenario. Plus, if we see some macroeconomic policy stimulus and the rebound of activities, especially investment and consumption. So I think 5 to 6 would be my base case, but I could still underestimate the actual result.
Well, thank you for that. So one source of uncertainty for the outlook, at least for me, relates to the stance of macroeconomic policy in China. So, I have the impression that many believe the overall stance for fiscal and monetary policy will be restrained, especially given concerns about high leverage. The central bank for a long time has not wished to see a surge in credit and has been wary of cutting rates sharply, as we did in the Fed and the ECB. Fiscal authorities have been seen as restrained, but others argue the government may wish to use fiscal policy actively, and one reads at times that local governments are stepping up their financing and that there's been regulatory relaxation on the housing front to support construction. So what is your take on the likely monetary and fiscal policy stances, and maybe the housing, the impact of the changes in housing regulations?
I think both readings you mentioned are correct. On the one hand, we have seen certainly for the past years, the policymakers have been relatively cautious in engaging in expansionary macroeconomic policies, whether fiscal or monetary policy. PBOC has maintained that we will adopt the so-called normal monetary policy. We will not going to adopt like overly, excessively expansionary monetary policy. That's the statement they repeatedly made in the past. So I think that's right. They're not going to do anything that is excessive in supporting growth. But the second point is also very important, and we already heard from the Central Economic Work Conference, which was held during December last year. Macroeconomic policy will remain supportive to economic growth. And recently, we are seeing all provincial governments are holding their own economic policy conferences right after the Chinese New Year holiday. And if there is one single message, that is we need to do everything to restore economic growth this year. Even in addition to some macro measures, they're even talking about the policy fine-tuning with regard to the property sector you mentioned. By the way, the property sector is stabilizing, and I don't expect the property sector to play a bigger role in boosting growth. But the negative impact from the property sector to economic growth is also diminishing. That could be regarded as a positive factor. And the policy toward the private enterprises and particularly toward the platform economy also refining, becoming much more supportive of activities in these areas. So I think the policy message is very clear. Now, obviously, we don't know the exact extent of the stimulus of these policies yet. We still wait for the National People's Congress meeting at the beginning of next month, at which they will announce the fiscal deficit and the policy, also the monetary policy stance. But when you mentioned the term restraint, I think it probably won't be a big negative factor for growth year. Because as I said, just the removal of the COVID-related restrictions should generate enough boost coming up of economic activities. So macroeconomic policy support might be needed, but I don't think it will rely. When I said 5 to 6%, I was not counting on the macro policy to give us that growth number.
Right. Well, there's plenty there that we can come back to. You just anticipated a bit my next question, which was what do you expect from the National People's Congress in March? And do you think the replacement of Li He and Yi Gang will have an important impact?
Well, I mean, it's obviously too early to say. We know who will replace Li He as the vice premier to be in charge of financial and monetary policy. He Lifeng is the current chairman or minister of the National Development Reform Commission. We still don't have the official confirmation yet who will replace Yi Gang as the central bank governor. So exactly what kind of change is going to take place, we really don't know. I mean, obviously it's up to everybody's speculation. I will say two things for now, which could prove to be wrong in a month or two. The first thing is, I think the macroeconomic policy stance was already decided at the Central Economic Work Conference, meaning if needed, macro policies will continue to support growth. And I think that is not going to change, whoever is in that position. The second thing which could change a bit, but we don't know yet, is that the China holds this so-called 5-yearly National Financial Work Conference. The original expectation was that meeting would be held during the summer last year, but it didn't. And now the expectation is probably will be sometime after the National People's Congress. That meeting is important because normally that meeting would set the financial policy for the next 5 years. So in a way, I think the meeting did not take place during the last summer could be a good thing, because now the incoming group of the officials can decide what they want to announce at that conference. What I heard was the incoming vice premier is already in charge in preparing for that conference, which means if he has some specific ideas and if he was willing to take some ideas, he is already in the position to do so. What exactly these will be, I don't know. But one of the areas I'm watching very closely is that if the incoming government might want to reconfigure or at least refine the financial regulatory system, that's something I would watch out very closely.
Maybe you can come back to that, because there've been a lot of changes in the financial regulatory structure over the years that are quite interesting. Just a question about China's growth model. I think you and I have discussed this in the past. So we've all heard of the Chinese leadership's desire to promote common prosperity, to bolster social equality, and dual circulation to strengthen domestic demand. The existing growth model, it seems, has been based on very high level investment and savings to generate infrastructure and industrial development. But analysts frequently agree that China needs a handoff to consumerism and services to promote more sustainable future growth, create a better social safety net, and that fiscal policy should move away from the past model and instead play a critical role in fostering social safety nets and consumerism. Yet many of these analysts would say that fiscal policy is still more apt to rely on buttressing investment, credit through the state-owned commercial banks, and doing things the old way, rather than moving on to the new model. What's your take on the growth model, and is the transition happening or proceeding, and if not, why?
Well, I think the transition is happening, but the transition is probably happening too slowly, according to some analysts. When we talk about the Chinese growth model in the past, there are two things probably would stand out. The first thing, as you said, when we think about the three growth drivers, exports, investment, and consumption, consumption was always lagging, and that was the feature in the past. And that's why the government is trying to boost the consumption going forward. The second part of the story of the past growth model was we had the so-called low-cost advantage. So the growth model was more like extensive growth and relying on this low value added stuff in a production. Going forward, we needed to change and make the growth model more sustainable. On the one hand, we probably need more consumption. If you don't have more consumption, then a lot of investment will end up in the so-called production capacity. If exports are not going to grow as rapidly as in the past, then we can easily end up with lots of excess capacity. That's, I think, the one simple reason why consumption needs to get stronger. And obviously, we don't need to remind everybody that consumption is the reason why we're producing all these goods. If we don't produce, then it's difficult to lift the living standard of the people. So in that sense, I think the policy, the so-called common prosperity you just mentioned, I think actually it's in the right direction. The reason why consumption has been lagging for the past decade, there are many reasons, but I can easily point to three reasons. Number one is household income as a share of national income is not very high. It's actually declining at some stage during the past couple of decades. That's why household consumption cannot keep pace with the national income. Number two, income distribution was rather unequal. And we all know high-income household has very low propensity to consume, while low-income household have high propensity to consume. Unequal income distribution really just depresses the aggregate consumer demand. The third reason was a lack of a very well-developed social security system. And that was evident during the COVID period when the people's jobs and income were hit. They cannot really consume because the social security system was not well developed, and the government was reluctant to hand out the direct subsidies to these households. This is why I think we'll need to do something to boost the consumption and probably at least the three areas I mentioned. And a common prosperity is one of the ways of achieving that. But the policy of the common prosperity was rolled out in a way that it created lots of negative consequences, like the impact on the private sector, on rich people, and so on. People became scared. And that's why I think the government now is downplaying about it. But I think the policy, the common prosperity policy will stay, and the only question is how can we roll it out in a more smooth fashion. The second factor is related to innovation, and I think this is a big challenge, whether or not the Chinese economy can innovate. Therefore, even when the cost level increases, we can remain productive. That's also a very big challenge for China. And so these are the two big challenges that we're facing in terms of changing the growth model. Just the final word, you mentioned many analysts observed that whenever the government needed to boost the growth, and the fiscal resources always are directed toward the public investment, infrastructure, and so on. I guess that's partly related to the way the government is more experienced in doing it. So when we say, well, we need to boost the growth, and the government will just allocate more funds to support the infrastructure, and I think that's probably a more direct impact. And partly because some officials worry that we don't have enough effective ways of supporting consumption in the near term. So for instance, if the social welfare system is not well developed, how do you effectively and efficiently allocate the government subsidy to the needed people? And plus, China is a very large country, whether we can like equitably distribute the state funds to support the households and so on. There are lots of questions. I mean, obviously, I would say these are difficulties that these are not overcomable. They can be overcome if the governments decide to do that. But you're right. In the past, whenever growth becomes a concern, fiscal policy is always directed toward public investment. That's the case also during the past 3 years.
Thank you. Yeah, and I dealt a lot with the global financial crisis, and obviously China made massive support through, but it was directed mainly through state-owned commercial banks to the enterprises and whatnot. Chinese total factor productivity growth is less than 1%. I don't know what your view on the sustainable growth rate is, but there are those who would say, oh, it's 3% or so. Chinese data suggests that the private sector is a much stronger engine for growth than the public sector, yet it seems the private sector doesn't have the same access to credit as the public sector, and that there's been much media discussion about the crackdown on key private firms, including the tech sector. So do you have a view on China's potential growth rate? Why is total factor productivity so low? And how can that be bolstered? Is the private sector the answer?
I think there are a number of reasons why TFP is slowing or even declining at some point of time. Number one, I would say growth is slowing. So for instance, right after the global financial crisis, our GDP growth was still above 10%. And now we're struggling around 5-6%. And you, as an economist, most people would know TFP is a residual calculated based on you account for the contribution to the factors and then remaining as total factor productivity. So when growth slows steadily, it's kind of a little bit of pro-cyclical factor goes with the growth number. That's the one reason. I think we should expect the TFP estimate should decline as the growth slows steadily. The second reason is more fundamental. As you just mentioned, the private sector, the tech sector, and so on. fundamentally, the question I mentioned when I responded to your earlier question really is the question of whether or not we can innovate. If we cannot innovate and the cost base is so much higher, then the economy becomes just less competitive. And you're also right, the private sector has been the backbone, the main drivers of innovation in China. They actually account for something like more than 70% of the patents they're created by the private enterprises. Foreign investor firms also contribute to the 25%. The state-owned enterprises are very important in the Chinese economy. They only contribute 5%. But I would also say the SOEs are important in some other ways. But in terms of innovation, we really need to rely on the private sector, including the tech sector. This is something I think I think the government policy needed to improve. I mean, during the past couple of years, as you correctly pointed out, the policy environment probably deteriorated toward the private sector, especially the tech sector. Some of the policy changes were probably needed. For instance, the platform economies. It was very important for the Chinese economy today, but we also saw quite a lot of the so-called irregular or even illegal behaviors of the platforms, and that's why the authorities want to bring the proper regulation for these sectors. That's what happened. But unfortunately, the way it happened was what we call campaign style introduction of the regulations, seriously damping the confidence and trust in that sector. Now we are entering into the new phase of development. As I mentioned at the very beginning, the government now is talking about improving the policy environment for the property sector, for the private enterprises, for the digital platforms, and so on. So I think they would improve going forward. I can't tell you for 100% confidence that these policy improvement is going to stay for the very long term, but at least in the near term, I see the policy environment is improving. So we probably should see some improvement in the innovative capability of the Chinese economy in the coming years.
Okay, we'll look forward to that. One last question, and then I'll move to the audience. So U.S.-China relations are strained. Janet Yellen and Li He met in Davos and before recent events, and that meeting portended, in my view, a welcome re-engagement on the economic and financial front. But in the US, we hear about fragmentation, tech wars, less reliance on Chinese supply chains, et cetera. I don't know, how is it seen in China, and what impact do you think this could have on the Chinese economy and the external sector?
Well, I mean, we just saw the numbers on trade, bilateral trade for China and the US, and we actually saw a record high number of trade between the two countries. So my takeaway is this. I think the general trade and investment relations will continue to improve unless we see much more dramatic policy restrictions on both sides. And obviously, the tariffs are not stopping growth of the trade relations. That's one thing. So I would say the market forces are still working. Comparative advantage is still very important. That's one part of the story. But I think we're also seeing some kind of decoupling, or what you call disintegration, in fragmentation in some other areas. I visited the US last month, and we also heard some talking about the so-called small yards, high fences, meaning in some of the high-tech sectors, they're going to install more restrictions of the bilateral relations. So my expectation is unless something dramatic changes dramatically in one direction or the other, otherwise a base case scenario is that the general trade and investment relation will continue to stay and probably grow, but in some specific areas like the tech sector and so on, I think the distance will probably become larger.
Well, thank you for that. And again, thank you for being with us today.